more on today's moves, let's bring in Fairlead Strategies Founder and Managing Partner, Katie Stockton. Katie, thanks so much for joining us here today. So at the midday point of the day, we started to see the NASDAQ gain some strength and sort of break away and did end up with a positive close. The Russell 2000, though, was the weak point all day long, closed down below 1%. What do you make of the charts and the action that you saw on the NASDAQ? Is this technology trade back in vogue all over again?
Well, it may be partly related to Treasury yields, but I do think that this technology sector rotation is real and here to stay. And I say that because we're seeing a lot of breakouts, and they're not just occurring on the charts of the likes of the FANG stocks or Amazon today, of course, is the big breakout, but also in the relative strength. So when you look at these sector benchmarks versus the S&P 500, you can see some breakouts there as well, and they reverse an intermediate term downtrend. And that suggests that this trend of outperformance that started really in early June can continue for the likes of these FANG stocks, but also even deeper than that on the small and mid cap front. I do think that we'll see this technology relative strength carry over into the small and mid cap names. Breadth has actually been very positive. That doesn't really apply to today's price action necessarily. But in general, with this up move that we've seen pretty healthy breadth, meaning that the participation has been there, even though the leadership has been pretty narrow.
And when you look at the flip side, what was strong today, consumer discretionary real estate, of course, makes sense with what's going on in rates. And consumer discretionary, if you look at the S&P sector breakdown, of course, you've got Amazon there as a big component, which, of course, we usually lump in the tech names. So what do you think of the consumer discretionary as a whole if you pull Amazon out and you're looking at the more pure consumer discretionary names?
The whole sector is poised to confirm a breakout this week, and new highs are bullish. They cleared the charts of resistance. So that's what we're seeing in the consumer discretionary benchmarks. Of course, that is helped by Amazon, which finally pushed out of a very long-term trading range. That breakout does bode well for follow-through in the coming months and even perhaps years by the way the chart sets up. So that's a bullish development for the consumer discretionary benchmarks. But there, too, I think it will go deeper than just Amazon and other mega caps in the space. When you look at things like ratios of retail stocks to consumer staples stocks, you're starting to see some breakouts there, too. And that supports additional outperformance and perhaps a bit farther down the market cap spectrum.
What's your take, Katie, on yields and the dollar with their recent moves?
I actually think that Treasury yields will move higher, and they're obviously not in any rush to do so. But I say that because you have this intermediate term oversold condition behind 10-year Treasury yields that we haven't seen the likes of since August 2020. And it's when you see a little upturn from that oversold territory that you tend to get sustained moves. So that's what I'm looking for. There is support on the chart around 1.3%. And then once we see the 50-day moving average cleared, I think the uptrend has really resumed in earnest there. So that's something I'm looking for. For the dollar or the dollar index, we've definitely seen a good backup off the lows. When you take a step back and you look at the long-term chart of the dollar index, so you can see it's really just a wide sort of trading range, consolidation phase, and getting somewhat overbought within that framework.
Katie, we've been talking about the sell-off in shares of Didi and then looking more broadly at the different Chinese stocks here. What do you make of the action there and what that may portend to some of the other stocks that are being held or sold off, as the case may be, to follow in the momentum with Didi?
I sometimes think that these are opportunities when you see these news-driven declines that are really somewhat specific to one stock and then sort of trickle down or trickle out to others that are related. And to me, the Chinese stocks have turned the corner from a momentum perspective after becoming deeply oversold, kind of with the growth stocks as well. So a lot of them came into very important support based on a model that's actually very popular in China called the cloud model. And these cloud model supports are still very much intact for Chinese equities despite their decline today. So I do think this may provide an opportunity, and I really do think that emerging markets being relatively oversold in absolute terms should be able to move higher from here.
Shepard Smith here. Thanks for watching CNBC on YouTube.